Welcome back to another weekly episode. So, all questions were answered for last week's episode. And it's been another great week for the market. And the recovery in the market is continuing with gradual breadth improvement happening every single day. As of this recording, I'm doing this at Friday, 3 p.m. The breadth of the market is now 39% stocks above 200 DMA. See, there is an important lesson that a lot of new people in the market have learned, that always make use of correction in the market. Don't focus so much on news flow. It's not important for you to put up 20%, 50%, 75% here, but it is important for you to put up, let's say, 10% here, another 5%, another 5%, another 5%. Just hit those lower levels with systematic investments. With stocks, it gets difficult because when index corrects, then stocks obviously falls in double digits, but you have ETFs. Throughout this correction, I've been speaking about so many ETFs you could have accumulated gradually. And now that the price has moved up, you would have so much of decent amount of cushion here that whenever the next pullback begins in the market, you can add more on top of this cushion. And you have to understand this game of fear mongering that goes on whenever the price is correcting. If you recollect, when price were falling, and for right reasons, because the name that is always being used is of Warren Buffett. He was sitting on so much of cash. And look at now what has happened. Is Warren Buffett wrong now? Why these things you don't hear? You don't hear because in the short term, always you will find people magnifying whatever is happening in the near term. So S&P 500 in a matter of like 12 days has gone from a new 26-week low to an all-time high. So, what about Warren Buffett now? Do you hear those examples? You don't. That is why you don't have to pay attention to news flows, social media accounts, and all the negative narrative that goes around. So, you look at our markets, the benchmark index Nifty and Bank Nifty is just at 50 DMA. These haven't recovered that much. And main reason being that obviously FIIs are chasing some other markets that are more lucrative in terms of some certain themes playing out. And from taxation point of view also. But there are a couple of sectors I had alerted you about. One was the CPSE sector. Look at where CPSE sector is. Despite of all the correction that was happening, it was forming a beautiful base, contracting, and it broke out. It just never looked back. What about India Nifty Defense? Look at defense sector. It's just marching away with great speed. I also spoke about extensively about the capital market. These are two sectors I've been super bullish on in terms of our own India specific story. Look at capital market. What has happened in this particular sector? So you have to understand that AI is not the only thing in the world. For India, our defense sector, our capital market sector, our new age economy stocks. I'll open up some examples because those charts I had pulled up. Because these are so many charts, these are not recommendation. These were not recommendation back then when I did it 3 weeks back, and it is not a recommendation now. But look at what has happened in businesses that were listed recently. Just look at the movement in these companies. What has happened? These have simply taken off. If you wait for news flow to turn, by that time most of the newly listed companies, some interesting business models would have deviated 15, 20, 25% above 50 DMA. Then the risk reward goes out of the window. That is why systematically putting little money at every dip is so important, because when this happens in the market, when price just reverses and starts heading higher, you have a lot of cushion to absorb any potential pullback that can come in the market. And then upon that pullback, you can further add to those positions, look at those stocks more closely, or maybe ETFs more closely, and then ride the trend for the next few months. There are a couple of things I'll tell you. What is interesting that is happening in the market, and when the reversal began, I had updated about this, that as opposed to the large cap stocks, because FIIs are not that interested in a market, look at what has happened. The first index I had shown was mid cap select. Look at mid cap select index, the kind of move that has played out. It's only a matter of time before it starts heading further higher. You look at something like small cap and micro cap also. These indices have also done exceptionally well. Look at micro cap, the kind of movement it has seen. Look at small cap, the kind of movement Nifty small cap has seen. Now these indices are comfortably sitting above 50 DMA now. All right, approaching the nearest pivot. Now you can mark this particular level as the final corrective level in the market, that is in terms of bottom. From intermediate, now you mark it as a final bottom. Now if Nifty starts correcting again, let's say Nifty starts heading towards something like this level, fills up this gap, then what will happen is that in the small cap index chart that you see, it might probably come down and test 50 DMA or maybe somewhere here. Are you getting? Because if you look at the leadership in the market today, if you look at which sectors have actually taken the market higher, it has been CPSE, PSE, it has been defense, capital market, metals, PSU banks, IPO stocks, some bit of pharma, healthcare. But as a basket, it has been the mid cap mainly, followed by small cap and some bit of micro cap. Now, which sectors are the weaker sectors in the market? IT digital still continues to struggle. Realty, tourism, FMCG, yes, they have seen some bounce on the upside, but it is not in line with what the stronger pockets are doing. And then there is one pocket that bothers me, which is banks, auto, mainly private banks also, that are still struggling. See, one of the reasons why Nifty has not moved up as ferociously as something like mid cap, select, or small cap is because banks are keeping a lid on it. Banks need to break through for Nifty as an index to even come closer to this all time high level. So now that we have seen a V shaped recovery in the market in terms of testing out 50 DMA and sustaining above it, for market to further put up a strong performance, you will need Bank Nifty to perform. Else, what will happen? We will now probably in the next couple of odd weeks go into some time consolidation thing, some pullback. For those who were courageous and disciplined to start buying here, they will get opportunities here to add to their positions. Because this is what cushion does in stock market. Cushion means when you're buying a little bit here, let's say putting up 20 odd percent, 30 odd percent of your account size, and suddenly you get a fillip, you create a 10 odd percent cushion to weather any kind of potential pullback that can come in the market. And of course, you won't get shaken out then, as opposed to someone who did not use any cushion while the price was heading lower. If he's buying here, then he will have negative impact when price pulls back. It is very common for price to test 50 DMA. Remember that. Multiple historical examples. You see a vertical movement, almost a retest of 50 DMA. Again, look at the multiple times 50 DMA. Look at this vicious retest of 50 DMA. I think this was the 400 par kind of thing that played out. Look at the test of 50 DMA. So sometimes 50 DMA is tested very quickly, sometimes in a delayed manner, but you don't know which one is going to happen today. I would still tell you that price action has been really good in the market in the last 12 odd days, especially when there was so much of pessimism. But breadth improvement in general needs more work. And that is where we need some bit of time consolidation in the market. So the sectors, even when the market was heading lower, it was CPSE, PSE, it was defense, it was capital market, it was some bit of PSU bank. Why some bit of PSU bank? Because PSU bank had pulled back sharply below 50 DMA. But on higher time frame charts, again, what was this? This was a major pivot, then one more major pivot, and one more major pivot now forming. So this is one more major pivot in a long-term PSU bank uptrend. The only index that violated in the sense, if you see, Bank Nifty did not violate the previous pivot, but on daily time frame level, it comfortably did. Going below this pivot level. So Bank Nifty did get distorted mainly because of the FII selling. There was some HDFC Bank news flow also that FIIs did not like. You saw a lot of selling coming in. And then, of course, UK oil had a lot of impact because the 100 mark, I've repeated so many times, was so important. And over the last 10, 15 days, price has tried to take it out. And again, it falls below it. It was important because it directly signals what kind of inflation outlook would be in the economy, and that would impact the rate sensitives more. Which are rate sensitives in terms of sectors? Mainly it is banks and financials. All right. So that was one of the reasons. One more reason that you're not seeing Bank Nifty actually bounce back with that strength is because of the inflation outlook. Just because oil is now below 100 does not mean everything is settled. There is some deadline in terms of peace talk that is for, I think, 21st or 22nd April. We all know the theatrics that are coming out from the White House. Who knows what tweet is coming? That is why don't blindly chase if you haven't done anything when correction was playing out. Time is your friend, volatility is your friend. Don't make them their enemies. I've been repeating this point for the last 2-3 weeks consistently. Do not, when the market goes into a corrective phase, try to time the bottom. Instead, spread out your bets. And towards last week's update, also towards the end of the video, obviously, I understand it's very difficult to stick to the end part, especially if you don't have sensationalism in a video. But for scaling in or even buying, if somebody missed, instead of a vertical approach, I had suggested a horizontal approach. That is, over a period of time, start deploying. Because if President Trump comes out with some new theatrics, you will again see a sharp pullback in the market, and you would see Nifty, Bank Nifty, mid cap, everything trying to retest 50 DMA, and then over time breadth would improve, and that would be your scaling in opportunity. And for those who did not do anything when the correction was playing out, let's say nothing in ETFs, nothing in banks, because banks had fallen so much, nothing in new age IPO companies. It was a wonderful opportunity for you to bet into new age IPO companies when price was most of those IPOs had corrected 45 to 50%. I think 3 weeks back I'd done that video. You cannot go behind every company, but a trick I had suggested in terms of what Peter Lynch has taught is that which products do you use. That is why specifically I gave you an example. Open up your iPhone and Android and check which app you're using. Are those company listed? All right. And look at the movement in some of those companies, 25-30% right from the bottom. So this is what happens. If you need to take some key lessons, then no social media and media commentary. I cannot tell you how critical it is. It constantly keeps you in a panic kind of state of mind, and that is not good for your investing or trading account. That is not good for your health either. You need to shut out everything. If you want to take examples, go back 3 weeks back and see what was being said about Indian economy. See what was being said about Indian macros. And this is something I repeat in every video. And every video I get a comment that probably I'm biased towards a particular government or something, and that is why I keep talking about positive macros. From this week and next week, I won't get those comments. You know why? Because look at where small caps, micro caps, and mid caps have gone. Always remember one thing, that stock market will always price in more negative in the short term while ignoring some good data points that are there in any economy. India does not have AI, I completely understand. But India can be the largest user of AI, and who knows what kind of applications will be coming out from India. This is very similar to the dot-com thing that played out in 2000, 2001. Of course, I was very young then, but if you study historical reports and data, India was nowhere in that race either. But our IT companies delivered phenomenal returns between 2000 and 2012, 13, 14. Just go and check the charts. So it is possible that maybe data centers, maybe you have these you have some of the stocks, you will require a lot of cooling of those data centers. Which are those stocks? Those are the stocks that are not directly related to AI, but those data centers cannot survive without those companies. So secondary plays are always there. They will always be there in India. I'm pretty much sure a lot of people will be coming out and saying Nasdaq has hit an all-time high. Look at Indian market, where Indian market is. That is how typically, this advertisement about not investing in India, this is justified. But look at those data center stocks. I cannot take examples, but from the new age IPO list itself, there have been some data center related stocks that are up 35-40% just in 12 days. Did Nasdaq do that much? No, it did not. So there will always be naysayers about Indian economy, about our growth, because we have 144 crore people. You also have to understand, out of those, maybe some few percentage points are there on internet, but even that number is greater than population of most countries. That is a point you will have to understand. And by nature, most of the people are pessimist. They like to read negative things. They like to harp upon negativity, like to harp upon, yes, this is not happening in India, that is not happening in India. Look at what is happening in India, that is where money is. But there is a saying that life is easier for people who have a positive mindset, and it is very difficult for people who have a negative mindset. They live in their own negative pool, and they keep sucking a lot of positive people in that pool. So always be aware. Cut out everybody from your life, whether it is a friend or a relative who is a negative kind of minded person, a petty person, because that person will always drag you down. And in stock markets, when you are young, you don't understand a few things. I remember this interview by Mr. Rakesh Jhunjhunwala in 2006 or 7, where I think that was a phase where a lot of correction was going on, and it was a different NDTV back then. I don't know whether it was called NDTV Profit or whether it was Bloomberg UTV, something it was there. I don't remember. Shivnath Thakral, I think he was the news anchor who was taking his interview. And nowadays, I don't know what he's doing because I haven't seen him on air for about 15 odd years. Mr. Jhunjhunwala said, life is easy for people who are optimistic in stock markets and extremely painful for those who are not optimistic. Now, this does not mean you don't look at data and don't have your own interpretation. Please do have it. But if price is suggesting otherwise, dump your opinion in the dustbin and start seeing what is moving up, which sectors are moving up, should I participate or not. Else, you will always be trapped. And by you, I mean people who are too caught up in news flow and those kind of things. You'll always be trapped in this vicious cycle of what is not happening in India. open up your eyes. Now I was reading India has slipped to the sixth position in terms of economy, and there were plenty of criticism on that point. Guys, it does not matter. It does not matter, because there will be companies in India that will be growing at par with some of the best companies that are there in the US also. It is up to you to find out which stocks in the market is having rising relative strength, classic Stan Weinstein structures. Which of those stocks are currently doing this? Again, I cannot open up stock. I'll open up a basket. Look at this basket. This is a beautiful relative strength basket. These are just those banks that were correcting, but relative strength was rising. All right. So there are plenty of examples where relative strength has just skyrocketed. And these names, some of the Nasdaq names will also not match the performance. It is just that you have to take out time and effort to find out. Leave a stock. Look at CPSA index. I can certainly talk about index. Look at the relative strength of CPSA index as the correction began. Look at it. This is a vertical climb. Look at the kind of outperformance. Because it is an index, it's just up 10 odd percent. What is it up? It is up 20%. Let's say you cannot catch the bottom. Let's say you caught it from here. It is up 15% when the entire market was falling. So you have opportunities here also. It is just that you have to be systematic in analyzing which stocks are heading up near all-time high, higher relative strength, and preferable sectors. It is not that difficult to find. All right. So I'll have another update next week. Have a great weekend ahead. Take care and be safe.